Angelo, what inspired you to create Christian Financial, and what vision did you have for the company from day one?
Yeah, well, Pete, first off, thank you so much for having me on the show. I'm, super excited. I love to share my information and knowledge out there with the world and the media. So I hope that this helps your followers to give them inspiration. Basically, kind of rewinding the clock, 2004 is kind of when I got into the mortgage industry. And at that time, it was still, you guys have probably seen the movie The Big Short, and stuff like that. That's where subprime mortgages were super hot. And, prior to that, and I grew up very poor, struggling financially, was in the restaurant business and, um, wasn't really sure what direction I was going to go with my life. I was going to school, Bauer College of Business for Finance and Economics here in Houston. And, I didn't really have a vision for staying in the food service industry. And I looked up to people like, Jeff Bezos, Warren Buffett, Steve Jobs, and just trying to do something bigger with my life. And I had a very good friend of mine that was in mortgage at that time, and he was doing extremely well financially. And for me, I was struggling and trying to survive, and I had just gotten married. And what the impetus was really just at that time was thriving, surviving, making money, and it looked like it was a good segue into finance. So I got into subprime lending at that time, which was extremely hot. And then obviously that imploded and crashed. And what we've been doing all along has just been, pivoting with the market and the economy as it ebbs and flows with inflation, interest rates, products, investors. And today we've added a significant product line to our lending platform that makes us very robust. So, those of you guys that don't know, we do commercial lending, private equity, and standard residential. So, a lot of lenders don't offer all that under one umbrella because it's very complicated to manage. But we've built out our lending platform such that whenever somebody inquires for a loan, we try to do the best that we can to capture the business and service that client. So that's kind of the backstory, Pete, on what started this and kind of where we are today.
How has the mortgage industry evolved since you first joined it in 2004?
Yeah, it's changed a lot, man. I mean, obviously, real estate values have skyrocketed. Um, the residential requirements for standard lending um, have the compliance has gone through the roof. And to me, it's overly compliant now, and so much that you know it's a very small. Actually, what's happened is a very small segment of our business because of it's just so complicated with the laws and regulations. And to me, it's too um, the amount of consumer laws that are out there really there's a lot of stuff that just doesn't make sense in my opinion. So I think that that's been a big change. And then what's kind of spurred out of that is something called the non-qualified mortgage or private lending because investors just don't want to deal with standard lending because of the regulatory and the compliance. And these are not things that these are things that, like, for example, DSCR loans, non-QM, all these products have been born to come up with innovative ideas to service people, service investors, service entrepreneurs, business owners, because standard lending is not doing it. Standard lending, conventional loans are on the decline, like Fannie Mae, Freddie Mac. I wouldn't be surprised in the next 20 years if those agencies became obsolete and were, replaced by private investors.
What separates Christian Financial from other
Yeah,
mortgage
that's a
lenders?
yeah, that's a good question, man. I mean, so the biggest thing with us is that we just try to be different. we try to present solutions to people to get stuff, solved, as far as getting the loan approved, funded, coming back with being solution oriented. I don't know if you've ever tried to get a loan before, Pete, but usually most lenders are extremely cautious, pessimistic, conservative, negative. And like if your hair's not combed the right way, your loan might get denied. So
Yeah, right.
I mean, it's just kind of and we just don't, we look at the opportunity and how can we make it work. So that's, we have candid, um, you know, people that work here that have a diplomatic and empathetic approach toward lending. And so that's really how we're going to be different. That doesn't mean we help everybody that calls us. It just means that our philosophy is different.
Got it.
Yep.
What are some of the biggest misconceptions that consumers have about the mortgage application process?
Yeah, I mean, I think that well, it depends. I mean, a lot of them think that the biggest issue as far as misconception is that I think the world that we live in today is instant gratification, and that somebody can just snap their fingers and the deal is just going to close. And it's just not like that, man. I mean, even if you're doing a private loan or hard money or bridge or whatever, there's still going to be requirements. There's a process, and some people, I think it's the era that we live in, but it's also the nature of human beings. I think they just want things fast, instantly, and it just doesn't work like that. When you're getting a mortgage loan, I mean, there's literally over 100 steps involved, and there's probably 60 different departments, and we don't have control of every department, like the appraiser, like the survey company, the title company, the insurance company. And so, you're relying on other departments to be in a cadence to close that transaction. And sometimes it doesn't happen, even the consumer or the borrower. So I think, and then also the amount of documentation that's needed to produce to close a transaction. A lot of customers are not mentally prepared for that. A lot of people, they can't produce their bank statements or W-2s or pay stubs, or it's very unorganized, or they had multiple jobs, or they can't explain things. So, I think those are probably the two biggest areas: is producing documentation and the timeline. People want to close in one day, and the average mortgage takes 30 to 60 days to close.
How do you help first time home buyers feel more confident during the
Yeah,
lending?
I mean that's a good question, Pete. First time buyers, it's their first time, right? So first time for anything, first time riding a bike, driving a car, they're very nervous. I mean, you literally just have to be there and hold their hand and walk them through everything, because they don't know what they don't know, and a lot of people go and Google stuff online and they get mixed information. So, you have to really, and then they're getting information from their dad, their mom, their realtor, their sister, and it's all conflicting, And so you have to really guide them and just be there with them as their not just as their lender, but as their friend, and show them. You have to show them the path.
What factors should borrowers consider other than the interest rate?
I mean, for me, it's always been about the relationship with who I'm dealing with. If I don't feel good about who I'm dealing with, I don't care about the interest rate. I don't mind for me personally, I don't mind paying more if I feel good about who I'm working with. I won't go to someone that I don't feel good about just because they're the cheapest rate. So I say the relationship, um, and then obviously the closing cost, the person's attitude. you know. So I think that for me, there's several factors. I mean, obviously the credibility of the company, those type of things.
How do you guys approach finding the right solution for the client when they have different objectives?
Well, we would need to, obviously distill down what they're trying to do, right? And then from there, match it up to the marketplace about what's available. Like whenever we first do the initial interview process with the client, we find out what specifically, you got to be very specific about what they're trying to do, and then try to mirror match the right lender for that situation. Like, see, somebody that says, "Well, I want to do everything." Well, we can't cater to that. You know what I mean? So, what do you want? Do you want an apartment complex? Do you want a house? Do you want a restaurant? Do you want a do you want a senior living facility? You can't tell me you want everything because I can't help that situation. If you want a house in Beverly Hills, California for, under 20 million, it needs to be 9 bedrooms, and you got 30% to put down, and you need to close in 60 days. That's very specific, right? So I need very specific information so I can obviously do my job.
What trends are you seeing in the mortgage market today that you think will um, drive drive the market over, say, the next 5 years?
I mean, I like to think that our new Fed chair is going to help to push rates down. So I'm optimistic and hopeful that interest rates go down. We'll see what happens. Um, I think that, like I said, conventional loans, if you see they're declining, I think more private lending is going to emerge because it's more interesting, it's more dynamic, more flexible underwriting. So I didn't say loose, I said flexible. So there's things that make more sense. So I think you'll see more products come online, more investors step into the marketplace, lower interest rates. Um, you know, the only thing that is somewhat of a concern is um, the inflation, what it's done to the asset prices, is somewhat concerning because I don't know how that's gonna in the next 10 years what that looks like for real estate evaluations. You know, because usually if interest rates go lower, that pushes values up higher, and we're already, I mean, for the most part, extremely high values for real estate. Um, so that's the only thing that's kind of the unknown is if there's going to be somewhat of a correction.
How have the higher interest rates changed consumers' approach to getting a home in the first place?
Yeah, it's affected them, man. I mean, you think about if you could get a rate in 2021 at 3% versus 7%, it's going to affect your buying power. You might have gotten approved for $1 million at a 3% rate, but you're only getting approved for 500 at a 7% rate. And that's what I'm trying to say is that there are no homes for that price range. And so it's kind of an interesting thing. Um, so I mean, even not just home buyers, but investors too. Multifamily has gotten killed with these high rates. Nobody wants to do multifamily deals because of how the rates have been. So I think there'll be supplemental ways to get rates lower, either with like we have buy downs. There's graduated loan programs. You can buy. There's interest only. I mean, even they have a 40-year fully amortized loan. I think they're even going to do a 50-year amortization. So you have to have ways to combat it.
What advice would you give to someone looking to be mortgage ready in the next, let's say, 12 months?
Check your credit, get it over 700. Get your bank statements ready for the last 12 months. Make sure you have no overdrafts, no NSFs. Don't change jobs. Have at least 6 months of reserves in your bank account. Um, don't move money around, transferring stuff back and forth. Don't do a whole bunch of hard inquiries on your credit. I mean, those are going to be the main things that I would suggest. Just try to build your money up in your account, and build your credit score up.
And what are some steps that consumers can take to build that credit score?
Yeah, I mean, the first step is, obviously going to look at your credit, annualcreditreport.com, looking at all three credit reports, and seeing what's on there. If you have, I mean, even stuff like erroneous addresses or erroneous names that may no longer apply to you, those need to be deleted. If you have stuff reporting inaccurately, that needs to be challenged and disputed. So I would start there. Look at your credit. If you don't know how to do it, you can hire a credit professional. But you definitely want to make sure that your credit, it has to be at least a minimum 700 or higher.
How has education shaped the way you inform buyers on their different options and how they think about the whole mortgage process?
What do you mean by, what do you like as far as what, home buyer education?
Yeah, educating the home buyer or the commercial real estate investor.
Yeah,
Um,
I mean, or I mean, yeah. Are you asking like, as far as, well, one of the things that we've created obviously is our social media channel to educate people, whether it's first time buyers, investors, entrepreneurs. I mean, that's why we have the channel. But I mean, we try to come out with, as much real time data as possible on loan programs, guidelines, requirements, how to get your deal approved, how to structure it so you can be successful. So I think it's critical because a lot of people, they just go apply for the loan and they get denied because they don't know what it takes, you know?
yeah, and um, often home ownership is one of the biggest, if not the biggest, purchases in the life of a consumer. How do you guys build trust with consumers while they're undergoing analysis around this important
Yeah.
decision?
Well, I mean, it's our brand, right? The brand. So they can look us up, they can check everything. Obviously, customer reviews, time in business. We answer the phone. It's not an AI bot. It's not an email. It's an actual human being. So we just try to be, as real as and genuine as we are. And then, we're open 7 days a week, but giving great service. And then again, we challenge everyone to go look us up online. They can check us out. They can see we're the real deal.
What's been one of the most rewarding client success stories that you've worked on?
Oh, just, I mean, really the biggest thing in aggregate is just, getting the deal funded, solving the problem, whether it's, saving a developer from foreclosure or helping a first time buyer purchase their home or a military veteran refinance their house. It's just the when you get the deal funded and you accomplish the goal. I mean, it's just it's a win-win. It's a very fulfilling feeling because you help somebody to make their life better, right?
Yeah, absolutely. How do you guys leverage technology to improve the home buying process for?
Yeah. We use the latest mortgage technology. We're also a big advocate. Like we use Chat GPT, Claude, AI to help us to streamline the process. However, we're not with um, the customer interface. Like we're still, eyes to eyes over the phone. We believe in that, and we don't ever want to have that diluted, that experience. So all of our salespeople, they give out their personal cell phone number. They have to communicate with their clients over the phone or in person, and that's something that I don't ever want to alienate from. So I do think AI is good and technology, but I still believe in the human value especially in a service industry.
What qualities do you look for in team members that you bring on to the Christian Financial team?
Yeah, I mean the same integrity, loyalty, commitment. I mean those are going to be some of the biggest things, the most three most important things to me.
What do you see the biggest opportunities in residential lending over the next 5 years?
I like ground up construction, um, like doing master plan communities, and then build to rent is a big thing. So building subdivisions, but not selling the homes, renting them out.
Got it. And if there's, one piece of advice that you could give to someone watching this interview on buying a home before they start the mortgage application process, what would it be?
Yeah, I mean, I would say, you know, either whether you reach out to us or somebody else, have a consultation before you have your credit pulled, to talk about what is it, what's the process, what are the requirements, get the checklist up front, so that way you can plan, right? I think preparation is key. Just don't go blindly applying all over the place and have your credit ran a whole bunch. Understand what is it going to take? How many bank statements do you need? What does your debt ratio need to be at? Do you have to pay off anything? How long do you need to be at your job? How much money do you need in your account? Get that whole thing figured out and then apply for the loan, right? So work with a professional to get it figured out up front.